Well, hello, everyone, and welcome. This is Sharon from Royalty Business Group, and I am so excited about today and the guests I have online with us. I have with me Darlene Jenkins from Affordable Benefit Solution. Hi, Darlene.
Hi. Hey, Facebook. How's everybody doing this evening?
Wonderful, wonderful. So I want to just make sure that everyone knows that we are here today to talk about Social Security. But before we get started and get into your questions and everything that you all have, I want Darlene to just give us a little bit of background on herself, how she came to where she's doing with Affordable Benefit Solutions, because Darlene and I just met, but I feel like I've known her for a long time. So come on, Darlene, tell us about yourself and how you started your business.
Oh, thank you. First, let me just thank you, Sharon, for allowing me to come on this platform and share with your audience. But as Sharon said, I am Darlene Jenkins with Affordable Benefit Solutions. I have been in the financial services industry now for 32 years. I was a former government employee. I left the government at the end of 1990, and I've been in the financial services ever since. And my primary focus is on educating federal employees, state employees on their benefits. We are government benefit specialists at Affordable Benefit Solutions, and our company has been around for over 30 years as well. My best friend, my business partner, Dr. Rita Bailey Rowland, started the company, and we've been together. And as I said, we specialize in educating government employees on their benefits and then crafting a financial roadmap to help them reach their financial destination in retirement.
All right. Well, it sounds like you all are busy because you are in this DC area, and that means it's a lot of federal employees in this area. Do you only service employees in the DC area? Do you have clients outside of DC?
Oh, no, we have clients all over the country, from California all the way down to Florida, up in New Jersey, Washington, Texas, everywhere. If there's a phone and an internet connection, we are there. But no, we have clients everywhere. So no matter where you're watching us from right now on Facebook, or you may come back and watch this broadcast later, please know if you have any questions, you can reach out to me at 301-577-6340 and ask your questions. I'm here to serve.
All right, well, I'm excited. And we're going to go ahead and get started because I know you got a lot of information, and I know that our attendees here are going to have a lot of questions when it comes to Social Security. So, Darlene, I know you were educating me the other day about Social Security, because when I first have been told about, not when I first was told about Social Security, but one of the things that I had heard was Social Security wasn't necessarily made to be a retirement system, but you were telling me that it actually was. So can you just educate us on the little bit of background about Social Security?
So, of course, everyone knows that Social Security was a part of the New Deal under President Roosevelt. But what a lot of people don't know is how the thinking behind setting it up. Because remember, we were coming out of the Great Depression. People had lost everything in the stock market. You know, it was just a lot going on. So people didn't have any money. So they set up this social network, which is now Social Security, to help the people that had lost everything. But what they did was they looked back at how the Europeans had set up their social network. And there was a man, I cannot remember his name, but when they set up theirs, they set it up at age 65. That's where that number came from. And the reason they chose age 65 is because, Sharon, no one was living to age 65. So they were thinking, hey, we're only going to have a very small number of people who are going to be collecting Social Security. And so that's how we came up with Social Security. But Social Security was initially put in place for those people during coming out of the Great Depression to help them. But the plan was to give them this safety net And as we came out, we had new jobs under the New Deal. So the thinking also was, well, they're not going to continue to need this level of support. And then that brings to what you were saying, that, oh, it wasn't supposed to be all of our money. And it's not. Actually, the plan was Social Security is only supposed to make up 40%, 30 to 40% of our retirement income. But the truth of the matter is, for over 50% of the people, it's 80 or 100% of their retirement income. Yeah.
Imagine, like, it's been almost, I would say almost 100 years that Social Security has been in existence. And they never went back and changed the age, because people are living a lot longer. I mean, you just saw the Queen of England, who passed away in her 90s, and you see so many people, celebrities. Angela Lansbury just passed away. She was in her 90s. So, you know, it's like so many people living to their 90s, 100, and you have, you know, it's still at 65. It's still at 65.
Well, let me just backtrack right there. We are living longer, and the age, the full Social Security age, has changed. It's not 65 anymore for everyone. The new age, depending on the year you were born, for most people, it's going to be 67. It is, yeah, for most people, it's actually going to be 67. Now, if you were born in let me just check real quick. I'm not trying to give out no wrong information on here. So let me just check this really quick. So if you were born between 1943 and 1954, then your full retirement age is 66. Those that still have the full retirement age of 65, they were born in 1937 and up until 1943. Okay, so from 43 to 54 is 66. And the way that works, so if you were born in 43, your full retirement age is 66. And then it goes up 2 months every year until you reach your date of birth year is 54. Now, for those of us born in 1960 and later, then that is our full retirement age is 67.
So, you know, you said something interesting, full retirement age, because you have age 62, now the age between 65 and 67. And I know that age 70 plays a part in there too. So can you explain to our attendees what the difference is of these different ages, 62, full Social Security age, and then age 70? What's the difference?
Okay, so I like to call these ages our legislative birthdays. Okay, we have the date we were born, but then we have our legislative birthdays for Social Security. So everyone can collect Social Security at age 62. That's called early Social Security. You're collecting it, you know, before your full Social Security age. But what they say, if you were born before 1960, then you will take a 25% reduction from the full amount you were supposed to receive at your full retirement age, okay, which is 66, and some months depending on your year. Now, if you were born after 1960, anyone after 1960, if you collect your Social Security benefits at age 62, then you're going to take a 30% reduction in benefits at age 62 if you collect them. Now, while that may sound like, oh my God, that's terrible. For some people, yes. For some people, no. You have one camp that says, no, don't take your Social Security before you get to your full retirement age. Then you have the other camp that says, no, collect it at 62 because Social Security might not be here. Well, Social Security is going to be here. Or all of the seniors in the country, and those of us who are right here in the nation's capital, Sharon, we will be down there at First and Independence in our little rollators, walking to protest. Oh, what you're not going to do is take our Social Security. So Social Security is going to be there. So that's what happens at age 62. Now, for all of my federal workers on here, okay, you all have a special carve out, because remember, I just said that everybody can collect Social Security at age 62. So if you're under the Federal Employees Retirement System, or FERS, if you work in the government, you know that stands for FERS, you all can retire anywhere from 55 to 57 or later if you want to. Your full retirement age, depending on what age you come into the government, 30 years, and your minimum retirement age, okay, which for most people is going to be 57, right? So if you've already got in your 30, 35 years and you're 57, you may be thinking, and you know that social, you all have a 3-tier system. You have your pension, you have Social Security, and then you have your TSP, right? So now here you are, you're 57, 58, let's just say you 60, and like, I've done my time, now it's time to leave. But Social Security is your second tier to your retirement system. And I just said you can't collect Social Security until age 62. So it's important to understand you have 2 retirement ages. One that is your first retirement age, and then the other that is Social Security. So because you cannot collect Social Security until age 62, period, because you're getting those checks from 2 different entities. OPM under FERS, for all of you FERS employees, if you retire before age 62, then you will get what's called a special supplemental check. Okay, that check is coming from OPM. And please hear me, because this is very, very important, and why planning comes into play. Because when you retire at, let's say, 57, okay, then OPM, not Social Security, OPM is going to give you a portion of the amount that you were supposed to, that you are scheduled to receive at age 62. Not your full retirement age, but age 62. And how they go about figuring out, Sharon, what percentage you're supposed to get, what they do is they take the number of years that you have worked, okay? So let's say you have worked 30 years, and then whatever that number is, 30, they divide it by 40. If you typing in, how do they come up with 40? Stop, because I don't know. I don't know.
Okay.
That's their formula. I don't know.
Mm-hmm.
But that percentage, so 30 divided by 40, that's 75%. So if your check at age 62 was supposed to be 1,800, then 75% of that is 1,600. So that's what you will be receiving from 57 when you retire to age 62 when you are eligible to receive your reduced Social Security benefit. Now, why am I going over this? Because here you are, you're getting one check from OPM, but it is delineated. This is your pension, this is your supplemental check. When you turn 62, so you're getting 1,600 from Social Security as a supplemental, but then you're also getting another, let's just call it 2,000 on your pension. Now, I know a lot of y'all out there are making more, so your formula for your retirement may be higher. But what I'm trying to get across is that once you reach age 62, then that supplement is going to stop. It's going to stop. Do you have to file early? No, you don't. You can choose to wait. But that's where planning comes into place. And that's what we do at my firm. And when you speak with Sharon, like she goes over with you the importance of planning, but we actually do the strategies if you don't want to collect it at 62. Now, we at Affordable Benefit Solutions, we have a different mindset when it comes to age 62, because we believe in, hey, you want to pass on and save your assets that are transferable. You with me? So If you're not, and please don't, it's not a one size fit all. We look at your whole picture. I'm just giving you some insight on how to look at what you have. So at age 62, if it's between, hey, I have my FERD, I have my TSP, and I have other assets, I'm single, my children are all grown, then maybe taking Social Security at 62 is a good strategy. How's that a good strategy, Darlene, and I'm losing 30%? Well, if you die, you can't pass on Social Security. So you're spending up all your assets trying to get to that extra amount on your check. And then you die and your family not getting your Social Security.
Right. So let me ask you a question, because you said that you're going to get that 30% less. And so one of our attendees asked, is there no penalty, just less money? Is that what it is? Or is there a penalty for receiving the money early? Because I know if you retire from federal government early and some other private sector agencies early, then there's a penalty. But is it a penalty or is it just reduced?
The reduction is the penalty. If that makes sense. The reduction is the penalty, but it's not the type. So that's the answer. The reduction, that 30%, that's your penalty for taking it before your full retirement age.
Okay. And then going back to the FERS supplement, I'm familiar with the FERS supplement, and it's based on, like you said, the time that you are a FERS employee. So if you were a FERS employee for 30 years, then they do the calculation just like you said. Now, if you have Social Security credits outside of your federal employment, sometimes people have a part-time job or they worked other places before going into federal service. How does that play into calculating your Social Security?
So this applies to federal employees. If you're a private sector employee, and you're working a full-time job and a part-time job, it's just more earnings on your record. And what that means is the more you earn, then the larger your check is going to be. So that amount at age 62, 67, and 70 is just going to be higher. That's all that means. But now, bringing it back to my federal employees, if you're under the FERS system and you are paying into Social Security under FERS and you're working a part-time job, the same thing applies to you. It's just your earnings record, you're making more money. So they're crediting. So when you file your income taxes at the end of the year, your salary is not only what you made on your job, or your income is not just what you made on your job, but also your part-time income. So that's just the income that's put on your Social Security earnings record. Now, for all of my civil service retirement system employees out there, or CSRS as we call them. So if you are a CSRS employee, Sharon, I have a client right now in this situation I'm about to go over. So, and this can happen to you one of two ways. Just like you said, hey, I worked under CSRS, but I had a part-time job paying into Social Security, because under the civil service retirement system, you do not pay into Social Security. If you have been in the government long enough, then I know you remember when on your pay stub, it used to say FICA. And so my CSRS clients was like, no, I paid into Social Security. No, that's when Social Security and Medicare came out as one deduction. And that said FICA. But that deduction was only for Medicare. It was not for Social Security. So now here you are under the civil service system. You're working part-time. You're getting your Social Security credits because you want not one, but you want 2 checks, right?
Right.
Well, what happens? So you're getting so these are the 2 things you need to know about. One, you're getting your Social Security statement, letting you know you're earning those credits. So you're moving up the ladder to be able to claim Social Security. But when you're getting that statement, They don't know you are a federal employee where you are working a job that you are not paying into Social Security. So they won't find that out, everybody, all my Facebook friends. They don't find that out until you actually retire and apply for it. Okay. Now I want to pause right there because the other scenario that will get you in this same situation is for those of you who switched from the civil service system when they had the opportunity for you to do that and went over to the FERS system. Right. So your time stopped counting under the civil service system. And now when you transfer it to FERS, now you're paying into the FERS system too. So you will have half of your time, depending on how much time you had in when you did it. But either way, you have time under the civil service system, and now you're actually paying into the FERS system. Or if you left the government and you were under a civil service system, and then you came back, and now it's FERS. Those people are called offset, right, Sharon? Those are my offset.
Right.
So with my client, he paid back his time. Okay. The government gives you credit for your time, but your time is equivalent to money. So he put the money back in to get that time. So now here you are, all of this group of people, you're under civil service system, but you've gotten all of your quarters. Now you have retired. So what's going to happen is that you are going to be subject to the windfall elimination provision. And that provision says if you have achieved all of your credits and you have worked a job where you did not pay into Social Security, then you are going to receive a reduction. And it's a whole big formula that they apply. Right.
So that's not just for that's not just for federal employees under CSRS or CSRS, like you were saying. It could be for any position where you did not pay into Social Security, where not too many jobs nowadays have that, but there were jobs and there are jobs out there that do have where you're not paying into Social Security. So that is something that you have to be aware of if you fall into that category.
Absolutely. And something else too that you have to be aware of, and those type of people generally have some sort of pension. If you have a pension, then you are going to fall into that category. Now, this is another situation as well where you may end up losing your spousal benefit if you make too much money. This also only applies to civil service employees, okay? Because if you have a pension under the old retirement system, the CSRS system, and let's say your spouse works private sector or they're under the FERS system, okay? Then if the spouse under the FERS system or in private industry, so now you all are in retirement, you're happy, you've gotten everything in order, he's bringing, and this is actually what happened to my best friend and my business partner, Rita Bailey, Roland. Her dad worked under the FERS system, but her stepmom was under the civil service system. And he was bringing in about $600 under the FERS pension because he started late. But from Social Security, he was bringing in about $1,900. Now, his wife was under civil service system, like I said. So when he passed away in December, that January, nothing came in the house. After everything was settled, because they applied that government pension offset, I'm sorry, that the government pension offset was for the people who had their quarters, and the windfall, this is for the spouses. So what they do is they basically take your pension, civil service spouses, they take your pension and they apply a 2/3 formula. So if 2/3 of your formula of your pension is more than your spousal benefit from Social Security, your Social Security spousal benefit is eliminated.
Yes, yes, I am familiar with that because that happened to me. My mom was, well, my parents had me when they were in their 40s. So when they retired, my mother worked for the federal government and she was CSRS. My father worked private sector. I was still in high school when, or probably just before high school when they retired. So when at first my mom got a little bit of money, and I got money, or at least they said I got money because I never saw it. But
Right.
then right, but then they stopped giving her money because she was CSRS, and money came in from my dad for Social Security for me. So I'm familiar with that. But you brought up spousal benefits, so we know that people get married, but people don't always stay married, right? So there are those benefits that former spouses are entitled to under Social Security. So tell us a little bit about that.
Okay, so you have to be married for at least 10 years. Now, I am an advocate for marriage. I believe in staying together. I want you all to fight, fight, fight to stay together. But I also realize that the divorce rate, Sharon, especially since the pandemic, has been going up even more. So I had a client who, during the pandemic, she had been married for like 7 years. They were, just been together a short period of time. And she was complaining, he was complaining, and they were like, she was like, I can't do this. I'm going to have to leave. And I said, well, wait a minute, how long y'all been married? And I let her know, well, if you leave now, you don't get Social Security. You got to be married to your spouse for at least 10 years to be able to claim on his record. Okay.
So how does that work? Now, how does that work with who gets what? Because I know it's something about the hire.
Yes. So Social Security. So that's the issue with Social Security right now. One person's record can have about 5 people claiming on their record. And you may be saying, 5 people, Darlene, who got 5 people? Well, you have your ex-spouse, you have your new spouse, or you might have 2 ex-spouses, depending on when you started, okay? So, but you got your ex-spouse, you got your new spouse. If you have young children, they're on there. If you have a disabled adult child, they can claim as well. Your parents, if you provide more than 50% of their care and you're claiming them, they can collect on your record as well. So that's why there is a solvency issue with Social Security, because all of these people are able to claim on the record. So what happens? So now you and your spouse, you split. Hey, I met the 10-year criteria. So a couple of things to know, ladies and gentlemen, you cannot remarry before age 65. If you do, you will not be able to keep that benefit, to be able to collect their benefit. Then now, when they change the law, okay, for Social Security, what they do is if you file for your spousal benefit or even your widow benefit, and I'll get into that as well. So everything still counts according to your age, okay? It still counts according to your age. So if you are trying to collect your spousal benefit, when they change the law, now it's something called deemed filing, which basically means you can't just go and say, hey, yes, I'm trying to get the spousal benefit, because as you said, they're going to say, okay, well, we're going to give you the higher of your spousal benefit or your benefit. So when you go to claim his, you're automatically applying for yours as well. And they're going to give you the higher of the two. So now you are deemed filing. So you have to be really careful with that too.
Okay, okay. So if I'm understanding you correctly, if my spouse and I divorce, then I am the one that makes the hire when he goes if I go to file first, then I'm really filing for myself, even though I might be trying to file for my spouse or my former spouse's benefit, because my former spouse could be older, or he become is older, and then I'll get what I was supposed to get instead of getting their money.
Correct.
That's
Correct.
messed up. Like,
It
oh,
is. That law, and it just escapes me right now, but it passed in 2016, 15, 16 was when the law was passed. So not only did they take away, not only did they declare the deemed filing rule, they also took away a great planning strategy, which was called file and suspend, where the spouse who had the higher earning record, because the spouse does have to file too, okay? So the spouse would file for their Social Security and then suspend the payment so that the wife could then file for her spousal benefit and receive that. But he's not collecting his Social Security. He has suspended it. So, but that's gone now. We can't do that anymore. Yeah, that's
all
gone.
right.
Don't write that down. It's gone. I was just giving a little bit of history. Don't y'all write that down.
Okay. Well, before we go on, I just want to make sure everyone knows who we are again. I'm Sharon with Royalty Business Group, your retirement and financial coach. And I have with me tonight Darlene Jenkins for Affordable Business Solutions. And we're talking about Social Security. So make sure you do two things. One, share this live. Make sure you share it out on your page so other people can be aware of what's going on, and they too can join into the conversation. And two, keep putting into the chat your questions. I'm seeing some great engagement, so I'm glad I have my Girl Trek sisters with me online, but I definitely want to get some more engagement in the chat. So please put your questions and your comments in the chat. So we had this conversation, or had a little discussion on my next comment, Darlene, where I said that most financial planners says a person needs 70% of their retirement income to live comfortably. Mm-hmm. I'm like, why can't I get 100%? Like, I've been living on 100% of my income. Why do I need to just have 70% of my income? And so you explained it, but I want you to explain it to our attendees.
So that is a great question, Sharon. Thank you. And when we do our planning, that's one of the things that we show people: your real retirement income that you need. You're not living on 100% of your income right now while you're working. You're not. So when you retire, you won't need 100% of your income either. Now you may be saying, what you talk about, Darlene?
I want to hear what you talk about.
What you talk about? So what happens is, let's say, and I'm gonna use easy numbers, okay? You're earning $100,000 a year, right? So you have a retirement plan coming out, right? If you're in the government, they're taking out a deduction for your FERS or CERS plan, 7% if you're under civil service. And if you're under the FERS, it's going to be anywhere from 0.8% all the way up to 4.1%. So that's coming out. You're not spending that. You're not living on that. You have Social Security coming out. You're not spending that. You're not living on that. You have Medicare, you have your health insurance, you have your dental vision, you have your union dues, your CFP, you have your allotments. You have a lot of stuff coming out right now. So when you retire, okay, even though you're going to be receiving less money, you're not going to have those things that are coming out right now coming out of your retirement. Now, some things are going to come out, okay? Depending on if you're working, if you go get another job, then it's not going to be coming out of your retirement pay, but Social Security will be coming out of your part-time pay. But if you're retired, you're not going to be paying Social Security. You're not going to have any allotments coming out or deductions coming out of your retirement pay for your thrift savings, 401ks, 403bs. You're not. You're still going to have to pay health insurance. So yeah, we factor that in, but then, and you're still going to have to pay taxes, but we've never lived on 100% of our pay. So
that's true.
Yeah.
But just to see the numbers, it's like, I want my 100%. But we do have a question in the chat, and I think you went over it before, but we're going to go again. So the question says, can both married couples who receive Social Security, can both married couples who retire receive Social Security benefits? If one spouse receives more than the other, is there some kind of penalty?
No. So Social Security does not penalize you. Okay. The way that we are thinking about getting a penalty, like if you take your TSP before 59 and a half, that's a penalty because you weren't supposed to do that. This is for long term. You're under 59 and a half. You're not retired. Give us 10% and then pay your taxes. Social Security doesn't work like that. So you worked and paid into Social Security, and your spouse worked and paid into Social Security. While you are both living, you both will be receiving your income from that. Now, when one of you predeceases the other, and this is why plan insurance and having a strategy and knowing what income to turn on, which source of income to turn on, when to turn it on, what is it going to look like if this first spouse goes, what's coming in the house, what's going to stop, what am I going to do, what if the second spouse goes, what's coming in the house, what am I going to do? Having a strategy for all of that. And we help people with those written retirement income plans. But when one of the spouses passes away, then what will happen is the remaining spouse, they'll look at the spouse that passed away. And if they were receiving more than you, then they'll bump your Social Security up by the amount of his, because now you're basically reverting back to a spousal benefit.
Okay, so we do have another question, and it says, how close to retirement shall you apply for your benefits?
That's going to depend on your situation. Again, it's not a one size fit all where, hey, everybody go apply 62. Oh no, everybody go apply. Don't apply to your full Social Security retirement age. It's going to depend on when what your finances, what your economy in your house dictates when you should apply for Social Security. Because if you're just getting on here, what I said earlier is that if you're not married and your children are grown, even though you might be taking care of them or the grandkids, they're not your dependent, but you have other assets available, then in those cases, oftentimes I tell my clients, hey, you need to go ahead and take Social Security at age 62. Why? Because you're trying to save that money you're getting from Social Security and spend up your assets that you can actually pass on to your loved ones. You're not passing Social Security on to your loved ones. So there are things that we can do and position it. So yeah.
So they starting to really jump now. People jumping into the chat, and we got about 15 minutes left because I want to be a respecter of everyone's time, and we try to keep it to an hour. So hopefully we can keep it to an hour. But if Darlene, if you don't have anything to do, we might go over an hour just a little bit. Okay. So our next question is, okay, let me move. If people jump.
I'm sorry, I'm trying to plug in my computer.
So the next question was about retiring. They're retiring, but they want to know about TSP. If they retire at age 56, can they would it be a penalty if they would withdraw their TSP at age 58 and a half?
So
think
if
that's what I
they,
got
I
right.
think okay, if I retire at 58, I think they meant to put 59 and a half. So if you work for the government, TSP is the only thing that does not, but you would have to. So if you work for the federal government, which obviously you do because you're asking about the TSP. So then you can withdraw it you can get periodic payments. You have to get some sort of payment from it. And let me just say this right now. Please, this applies to everybody. Don't take out all that TSP money. Like, hey, give me my money. I want to do what I want to do with it. You can. But when you take it all out at one time, you are creating a tax burden on yourself like you could not imagine. And the year you take it out, if you retired in June and you're like, hey, give me my money. So now you were just earning, let's say 100,000. So that's 50,000 for the year that you've earned. And now you done took out 150,000 from your TSP. Your income for that year will be 200,000. And that's what you will pay taxes on. So you have to really, make sure you understand what you're doing when you come, when you start taking out money. But no, the answer is you will not be penalized if you are retired and you draw it out through monthly payments. Then no, you will not have a penalty. Okay. I hope that answers the question.
All right. So the question, I think you can see it too, I'm going to go to is, does retirement at age 62 affect filing taxes in any way?
So I'm not quite sure what you mean by that, but I'm glad you got into taxes and Social Security. So one of the myths I want to clear up right now is that you will always pay taxes on your Social Security. Sharon, I don't know where people got this idea that once you turn 70, you no longer pay taxes. The first time I heard that, I'm like, I don't know where you got that from. As long as you have income, no matter what the source, you're going to be paying taxes on it. Now, with so if you retire and you are getting Social Security and your pension, that's just all of your earned income together. With Social Security, did you know up until 1984, Social Security was not taxed? It was not taxed. Up until
isn't some of it, so isn't when you get your thing, like I said, because like I said, my parents were older, so I remember them receiving a statement saying some part was taxable and some wasn't.
Yes. So now, let me just, in 99% of the cases, really with the amount in the DC area, in 99, I feel comfortable saying in 99.5% of the cases, if you work for the federal government, your Social Security, and you're eligible for Social Security, your Social Security will be taxed at the 85% threshold. Why am I saying that? Because like I said, before 1984, Social Security was not taxed. Mm-hmm. But then President Reagan was like, this is a good source of income. So we have things that we need to pay for. And we're going to start tapping into the Social Security Trust Fund. But to make up for the revenue, what we're going to do is we're going to tax up to 50% of the benefit. If they earn over, if you're single and you earn over $24,000. If your other income is over $24,000, then 50% of your Social Security benefit will be taxed.
That's still the same number, even though that was almost 40 years ago.
Yeah. And then here's the other thing. So that was in 84. And then President Clinton said, you know what? That works so good. I'm going to tack on another 35%. But this is what we're going to do. So the first 24,000, that'll be taxed at, so if you meet, and it's a whole formula and I can sit down and show you, but if you earn over 24,000, then 50% is going to be taxable. But then if you earn over 35,000, 34, 35,000, then another 35% will be taxable for a total of 85%. Now, when that first came online, that only affected about 10 to 12% of people, because when you think about in the 80s, $24,000 was still, like, who making $24,000 in retirement? But because of inflation, our earnings have increased, but they did not put inflation adjustment on those thresholds. Because if they had, then it still would be only about 10 to 12% of people that would be affected, because those levels would be somewhere around $60,000 to $85,000. But yeah, so they didn't change that. That's why now it affects about 56 to 62% of us.
Woo,
And in addition, yes, and let me just add this on. So for those of you out there and this is why understanding your taxes and where you have your retirement funds position comes into play as well. Because when you take money out of your tax deferred account, then that counts as income. And I'm just going to touch on Medicare really quickly, because for those of you thinking, oh, okay, well, once I retire, I have all of these projects I want to get done, or, hey, I'm just going to be like Queen Latifah on Last Holiday, and I'm going to take that money and I'm going on a worldwide tour. When you take that money out, depending on how much it is, it could also have you paying more in your Medicare Part B premiums. So, yeah.
Woo. Okay. I think you can see the chat a little bit better than I can, because it's just keep moving so fast for me. But there was a question about when a person can receive their first check for Social Security. Do you know about an estimate or respond to that question?
Okay, so now
they had another thing. They said they're 62 now and they're going to retire at 65.
Is that your full Social Security retirement age, or you're just like, hey, I'm out here? And that's another thing too. So if you're full Social Security retirement age, the person who said that. So let's say your full Social Security retirement age is at 66 or even 67, and you're going at 65. You're at 80% of your benefit right there. So you can go ahead, if your full Social Security age is 66, you're at 90% of the benefit. Don't worry about it. Go ahead, take it and file it. Now, according to the website, if you file before the first of the month, it's supposed to start the following month. I cannot affirm or deny that to be true. I'm just stating what they said. Right. But yeah, go ahead and apply early. And the next time we'll have to talk about Medicare, because that's your other legislative birthday.
Know what? We will have to schedule another thing for Medicare, because it is this is just so much, so many questions coming in here that I can't keep up with them. Let me ask about TSP.
Yeah, I see the one from Tangi. Hey, Tangi, thank you for joining us and getting in the chat. So if you retire and you receive the pension supplement, so you're going to only be getting it for 2 years. When should you wait a year to start your TSP? Again, that's going to depend on what your needs are. What does your budget say you need? What do you want to do in retirement? Because retirement is not just a date on the calendar or age where you say, hey, I'm out of here. It's so much more than that, right, Sharon? It's so much more. So in order for me to accurately answer that, I would need to know things like, what's your dreams for retirement? What do you have plans? Who else do you help? Are you taking care, helping with your grandkids, with nieces, sisters, your mother? Like with my mom, even though she was retired, I'm the only child. I had one child. So she told me I will be buying my poopy her school clothes. I was like, hey, go ahead. Thank you. But we don't put those type of things on our budget. And then sometimes we'll look up like, well, I don't have no because it's those little things that we don't put on the budget, our tithes, the $20, $30 we give to this person, we're giving it to them every month and don't even realize it because we're used to it. So yeah, should you wait a year? I can't fully answer that because there's so much more information to make sure that everybody deserves to have the type of retirement that they are dreaming about right now. And if you're not thinking about it, then you need to start thinking about it. How much do you need to have coming in, or do you want to have coming in? And why do you want to have that amount coming in? You say, oh, well, I want to travel. Where are you traveling to? Down to the country? Because that's a different cost than traveling over to Dubai,
Right.
or,
Right.
some Europe, going on a work. So we have to start, crystallizing what is it that we want. Then we can back in and say, hey, this is the money you need. And hey, these are the tools and the strategies that we need to have, because it's so much more. What's your income plan? What's your plan for inflation? What's your healthcare plan?
And you know what? We can have all these plans in place, but if our mind is not set like it's supposed to be,
yes,
on changing those bad habits that we had, and it's not just our bad financial spending habits, it's just a bad mindset on certain things. We might be too scared to spend money on certain things because we just grew up without. So when we get money, we just like, no, I don't want to spend, I don't want to do that. That's a bad mindset there as well. So you have that where I'm gonna spend because I got it, and like you said, it's just gone, or I'm gonna hoard it and I'm not gonna spend, I'm not gonna give, I'm not gonna do anything. So changing your mindset so it is right, so you can reach those financial goals, to create that financial legacy, is very important. Otherwise, the information is just information. It's not going to do you or anybody else any good.
Yep, that's it.
It
Having information and not applying it is what? Useless. So that's why you all on here. If you are not with Sharon and Royalty, you need to go ahead, contact her, click on that membership. We have a partnership. You need to talk to her. Like she said, mindset is crucial. It's crucial. And then we can work out the strategies you need to help you reach what? Your financial destination.
That's exactly. Because like in Vogue, you say, free your mind and the rest will follow. That is exactly what you do. You have to free your mind so the rest will follow. And then, like you said, once you work with me, then you go and work with Darlene, and she will just she will say, okay, now you know what to do. Now this is how you're going to do it. And we're going to work together to get this done, because it's not just about us and where we want, but it's about leaving a legacy for others to follow, because we pass on bad habits. Even though we might not think we're doing that, we can pass on bad habits to our children and our children's children. And so we don't want that. We want to create a legacy. In our community, so many people don't leave stuff. We got GoFundMe's for funerals. We got GoFundMe's for somebody going to a hospital. We need to be better with it. And there's so much that we need to be educated on. And that is just what we're here to do. So Darlene, I thank you so much for all the great information. And we're going to have a part 2. I'm going to schedule a part 2 for you to come back and answer more of these questions, because I know my people out there, and they got more questions. I know they got more questions.
I see some Medicare questions in here. Yes. And Alita said, the struggle is real. Leave us alone. No, Alita, we are here to help you. We're here to help you. And I'm going to tell you, we at Affordable Benefit Solutions, because I also do a program called Financial Fun Friday on the first and third Friday each month at 10 a.m. Eastern Standard Time. But we are going to be doing a no spend challenge. Now, that doesn't mean you can't still go to the grocery store and get your food, but it does mean that those items that we don't need to survive are eliminated. And you talking about a struggle, because I love donuts. The first time we did it, I pulled all the way up to the Dunkin' Donuts and was out my car, hand on the handle, and was like, oh, I can't have this. And had to get back in my car. Now, Lisa, that's a struggle.
It's a struggle. That's a struggle. We're gonna look forward to that.
Yes.
And you know what? Whenever you start, because sometimes people say, I want to start something for the new year. And they, set those things, those resolutions. That's what they were. Resolutions for the new year. Whenever you put that challenges, it doesn't matter if it's in the middle of March. We're gonna be down for it. I'm gonna make sure that I promote it. We're gonna be down for that challenge. So because whatever we don't spend, what can we do? We can put it in our savings. We can put it in our TSP. We can put it in our IRA, our Roth, whatever it is. We can put it towards something savings for our grandchildren, for our children, something to build wealth for the future. So definitely,
yes, and we have to
lock that Amazon account.
Yes, it takes a community, because I jumped in our group and I was like, help me, I need a donut. Like, I did this emoji where I was thinking about a donut, and they were like, don't do it, get in your car. People, for you coffee drinkers, all of my Starbucks people out here, that was my best friend. I was like, if you don't pull away. So she started making it at home, and she's actually still making it at home. Now she buys it out, but for the most part, she drinks her coffee at home.
Mm-hmm. So many ways we can save money that we don't even think about. So yes, Darlene, thank you so much. We are going to have a part two where we'll talk a little bit about Social Security, but when we'll get into that Medicare, because some people feel that it's kind of the same, but they're really separate programs. And we want to make sure people understand about both. So again, I'm Sharon from Royalty Business Group. You have Darlene Jenkins from Affordable Business Solutions, who's right here in the DC area, but she serves no matter where you are. So make sure you reach out to her. And when is your next free financial fund Friday?
It's going to be next Friday, the 17th.
Okay, all right. And it's at 10 a.m., correct?
10 a.m. Eastern Standard Time. And we actually broadcast live on Facebook simultaneously on my business page. So I will give Sharon that information, drop the link. We do a Zoom webinar where when you come on and you talk to us, just like I'm doing right now, I talk right back to you. Because Dee,
yes,
I need to lock my Amazon too. So lock it, throw it away, as I just bought.
But I know they get you with those. They get you with that.
I'm no different than you. I had the same struggles, but on some things I've come to the other side, and I know how to put the brakes on, because I know what that leads to. But together, that's what team is, right? Together, each achieves more. So we can definitely do it. I'll send you all the information. This has been so great, Sharon. Thank you so much for having me on. Your audience has been wonderful and real. I love when you all Smoothie King. No, I have gone from Smoothie King to tropical smoothie.
Oh, that's where all the sugar's in that. You gotta make your own smoothie. Make your own smoothie. That's what I do. Make my own smoothie. It's healthier for you.
Yeah,
we're gonna be on here forever. We gotta let people go.
Thank you, everyone. Have a great evening. And we will see you on the next live.
Great night. God bless.
Bye-bye.